Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Technical Director of AleaSoft and Associate Partner of Alea Green, and thank you for joining us today to the webinar with the topic Prospect for the Energy Markets in Europe, AleaSoft Services for the Energy Sector. As usual, our speaker today will be Uriol Salto, Data Analysis and Modeling Director of AleaSoft and Associate Partner of Alea Green, that will analyze the evolution of the European energy markets and the services we are offering for the energy sector. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoy the webinar. Uriol, please share your slides.
Thank you, Alejandro. Good morning, everybody. So, yes, today we are only by ourselves. We don't have invited the speakers. We are close to the holiday season, so we will try to make it a little bit lighter. But anyway, there are very interesting things, as you will see, as we review the energy markets during the last weeks. And also today, this month, we are celebrating the 4th anniversary of this webinar monthly series that we are performing. We started in December 2019, so this is the 4th year. We skipped some months, some holidays. I remember also some August webinars maybe, but well, so far 39 editions of this webinar series. So we are very happy because we have quite a consistent audience for all these years, and well, I hope this means that the content that we are offering it's useful and interesting for you. So thank you for being here, and let's start right away. As Alejandro mentioned, we will be explaining our services because we realized that we are basically known because we are providing forecasting services, but there is a huge range, a huge matrix of services that we offer. So maybe some of them will be useful for you. So we will use this opportunity to show you what we can offer and how we can help you. So just a brief introduction now, and then in the second part we will explain with some more time all the services that we are offering. But basically, in AleaSoft, we offer forecasting services for the energy markets, for the energy sector. We are covering all the energy markets in Europe. We are also covering some energy markets in South America, in Chile mainly, and also some gas markets in the United States. And our goal is to cover all the energy markets at the global level. So we are exploring the Asian markets. This year, the company celebrates its 24th anniversary. And our goal, we are reaching the end of the year, and the goal by the end of the year is to fully cover the 35 European energy markets. This means gas and electricity markets at all the horizons. So short-term, long-term, and short-term, mid-term, and long-term. And this is our goal. So by the beginning of the next year, we will be fully covering all the European energy markets. And as I said, in the second part, we will cover with more detail all the services that we are offering. But basically, we offer forecasting services for any variable that can be relevant or interesting for the energy sector. So any company, probably if you are looking this webinar, you are in some of these groups of companies. And as I mentioned, in the second part, we will explain it in some more detail, the services that we are offering. The forecasting methodology that we use is a methodology that we developed ourselves. And the main 3 points that we always like to stress about this methodology is that it is a completely scientifically based methodology. This provides consistent, coherent results. The coherency and consistency of our forecast, their stability from one deliver to the next update. It's one of the main points that why our clients rely on us and on our forecast. And well, it's the methodology that we have been using now for more than 24 years, starting in the European electricity market, Iberian electricity markets, and now covering all the European energy markets, as I mentioned. Also, there is Alea Green, is the long-term division of the company, focused on long-term reports, long-term analysis, long-term forecasting. Also, as we also act as a market integrator, so we are a hub where as we have clients coming from all the sides, so generators, consumers, investors, bank, lenders. So basically, we act as a market integrator for if you are looking for a counterparty for a PPA, being you an off-taker or being a producer, or if you are looking to buy or sell renewable assets. So among the database of our clients, we can act as this hub, as this market integrator. So starting the review of the energy markets in the last weeks, we always start with the Brent oil prices. And well, in our last webinar, it was 4 weeks ago, we already saw how Brent prices were clearly going down. As we mentioned, there is on the demand side, there is no pressure on prices. So the most probable direction of the prices was going to be down, and effectively prices went down. So far, they are 25% down from the peak, close to the $100 per barrel that they reached by the end of September, beginning of October. And again, there is no pressure from the demand side. So basically, on the producer side, so the organization of countries producing and exporting oil, basically they are trying to balance the supply to really match the demand, that it's not really increasing as expected. So far this it wasn't last week, it was a couple of weeks ago, OPEC countries announced further cuts. So they announced cuts on spring this year. Then there was a huge unilateral cut from Saudi Arabia on March, and now they basically doubled. All the countries doubled the announced cuts. So by beginning the next month, beginning January, the cut in the production will be around 2.2 million barrels per day, starting the next quarter. So from no pressure from the demand side, supply side is trying to balance it. Prices are reaching this level of the $70 per barrel. It's the level of the last minimums. It's kind of a strong barrier, let's say here. So probably prices are going to be or to stay around the $70 per barrel. If they cross the $70 per barrel, then they can go much farther below. But at least for the following month, prices around the $70. It's the level of expected prices. Now, gas prices. This is the one of the most interesting ones, because it's one of the gas prices are the ones that are having basically a clear impact on electricity market prices. So on the last weeks, prices have been going down. Right now are around the 35 euros megawatt hour, 35 euros per megawatt hour. Going down, as I said. It looks kind of counterintuitive, because we are we are already in the heating season, so we are withdrawing gas from the reserve. Demand is increasing, but prices are going down. So this is clearly a sign that the prices in the gas, so gas prices were kind of a little overpriced, basically because of the uncertainty. So the uncertainty when facing the winter season produced volatility on one side and higher prices on the other. So basically, as we are entering the winter season with full gas reserve, as we will see in the next slides, and basically no steady supply of piped gas coming from Norway, and LNG coming by sea. Basically, steady supply, ample reserve. The weather, it's not being so. The beginning of this winter, it's being relatively mild. So basically, calm markets mean lower prices in this case. So prices are going down. The expected levels probably not sure if they will reach the 25 euros megawatt. 25 euros per megawatt hour that were the last minimums that we saw, and it's also the price level that before this crisis. So basically, if they go down, they will go down probably at most down to 25, but probably 30. It's the price that we should expect, a little bit more maybe during this winter. On the demand side, gas demand side, for a second month in a row, we had an increase, an annual increase on the gas consumption, coming mainly from the residential sector, basically due to the heating, and also some increase on the industry. So industry production is increasing slowly, but increasing. But looking at the gas used in the power sector, so gas used for producing electricity, a clear decrease compared to the last year. Basically, compared to the last year, we have more renewables, we have more hydro production, nuclear availability from the French power plants is also increased. So basically, less gas. It's been the clear trend from the last month, less and less gas for gas production. But on global, gas demand is increasing, although when we compare to the levels that we had in 2021, we are still 25% down. So a clear long-term decrease, but comparing with the last year, demand has increased. Gas reserves, well, they are not full. We are already withdrawing gas, but still more than 90% full. We are already in the heating season. So basically on the no risk of supply really, unless there is something very, very extraordinary happening on the supply side, and also very low temperatures. But as the gas prices reflect, there is really no tension on the supply side for gas during this winter. CO2 prices, well, the same trend that we have been seeing for the last month, even increased, decreasing the rate of decreasing prices increased in the last weeks. Right now down to the 65, close to the 65 euros megawatt hour. Euros per ton. Yesterday I read that investment funds are having a net short position on CO2 prices. So basically a lot of selling pressure. So probably this is something also pushing the prices down. At the long term, we know that the CO2 prices are going to increase. It's a market designed to increase in the long term. But right now, no sign of prices recovering. So we will see. Probably it's difficult that they will go much lower than these levels, because we are approaching the previous minimums. But really no clear signs on when the recovery of these prices will start. Okay, let's move to electricity markets. Here, I always take the opportunity to show our online data platform. This is also one of the services that we are offering to our clients. So we have an online platform where you can find all the data needed are relevant for the energy sector. Information is power, and in the energy sector it's even more important. So basically any role, being you a trader, an analyst, a CEO, a CFO, journalist, so anything, anybody related with the energy markets in some way, having all the information in one place with a common format where you can even perform some basic analysis, always updated, always on time, is really very convenient and give you some advantage. So, well, the data is organized in what we call observatories, organized by electricity markets and fuels, etc. And this is the comparison of the monthly average prices for some of the most important electricity markets in Europe. So basically, we have Spain, Netherlands, Belgium, Germany, Italy, and UK. And this is since 2020. And the last full month that we have of data, it's November. And comparing November with October, that is the last full month that we saw in our last webinar, we see clearly how prices in the Spanish market, it's the blue line, decrease. So Spanish market has the largest decrease by 30% month on month. So comparing to last month, 30% decrease. Then we see Italy, also the highest prices, but also decreased in November, 9% down prices in Italy. And then the rest of the markets that are relatively flat, but prices increased on average around 5%, all the markets. UK 13% is the one that increased the most. And if we make a zoom, if we focus if we focus in the last days, this is the daily average for the same market, starting in the October, then we have November, and the days that we are so far in December. And again, we see how starting by the end of October, the Spanish market, that is the blue line, basically had some very low periods, price periods. And well, the rest of the days it was coupled with the rest of the market, but there are some days, some episodes of very low prices. This is something that we also saw in our last webinars, but the same behavior, the same trend kept going in the rest of November and the start of December. So if we, for instance, try to relate the Spanish electricity market price, that is the blue line, compared with the wind energy production in Spain, that is the red line, we can see a clear correlation or anti-correlation. So basically, all these low price days that we see in the Spanish electricity market are clearly related with high wind energy periods. So wind energy is one of the main drivers when looking from day to day, from week to week, one of the main drivers of the electricity market price in Spain. And this has been the behavior since the beginning. Well, since the beginning of this year. This is the weekly average price and the weekly wind energy production since the beginning of 2023. And you can see how there is a clear anti-correlation. So weeks with high wind corresponds clearly with weeks with low price, and vice versa. So yeah, this is one of the ways that you can use our platforms to have data on hand, and also to find and try these kinds of analysis. Okay, I'll go back to my slides. Here they are. Okay. Also, in our website, you can find all the reports and all the analysis that we provide. We will talk also in the second part in detail about all these reports, but basically long-term reports. We cover all the energy markets in Europe. Those are the ones that are more demanded, but we cover all of them. Analysis on the drivers and that are impacting electricity market prices. Reports on PPAs volume, on PPA prices. Also analyzing any aspect, any driver in the future of the energy sector at the long term. We are talking about 30 years ahead. And also analyzing or modeling individual projects. If you have a project, if you want to explore a potential location, we can explore the natural resources there, solar, wind speed, solar radiation, etc., trying to see what can be the capture price for a power plant located there. Okay. And moving now to the futures markets to see what are the futures market telling us now about the energy that it's going to be delivered into the future. Brent oil prices. This is the forward curve for Brent oil. This is compared to the curve that we saw in our last webinar 4 weeks ago. Basically, following the decrease in the spot prices, clear decrease in the short term of the futures prices, 8.7% down in 2024, 6.3% down in 2025, and then decreasing at the long term. Prices still around the $70 per barrel. That's also why $70 is a kind of a strong support for prices, because it's the long-term price of the forward curve. Also, if you can if you can appreciate, we have something that it's not relatively common in this, have been common in this year, that it's increasing a slope at the beginning of the forward curve. This is what is called a contango situation, and this, looking at the slope of this curve, so basically the difference between the second month with respect to the first month, so the spread between M2 and M1, you can see that right now is positive, so we have a contango situation. And it's at the level of the contango that we had at the beginning of the year, and then in summer we'll have a brief episode of contango, but most of the year it's being on a backwardation situation. So clearly some exceptionality here, basically because prices are going down clearly, so there is some expectation that in the very short term prices can be a little bit higher than they are right now. As I mentioned, it's difficult for them to go below the $70 barrier. Gas prices, here is where we are seeing the larger the larger decrease. So spot prices are going down. Maybe in the graph we didn't see it so clearly, but they are really going down at a relatively high speed, and this is impacting clearly in the forward curve. So we had a huge decrease, 27% down in 2024, 18% down 2025, 11% down in 2026. So huge decreases. And as we will see, this is also having a huge impact on the futures for the electricity prices. Very huge increase. I think this is one of the largest decreases that I have seen in these webinars when we are comparing basically 1 month to the previous one. This is one of the largest decreases. So we have had a lot of volatility during this year, but really this is a huge decrease in the futures prices. And finally, CO2 and the CO2 forward curve. Also very large decrease, 14% down, basically along all the horizon. Very large increase also, basically following the decrease in the spot prices. The forward curve for CO2 is very rigid, so it usually moves all together in all the maturities. So basically following spot prices down, forward curve down. And as I mentioned, electricity futures for the first years, Cal 24, Cal 25, very large drops, basically at the same level of the decrease of futures of the gas futures, between 22% and 27%, depending on the country. around 20% for Cal 25. So very large. Basically, well, as I mentioned, showing that there is less uncertainty on the winter. So basically, futures don't have an upside pressure. Basically, so they basically go down to a more realistic expected prices, and this has a clear effect on the electricity market prices and electricity power futures. And to finish this first part of the webinar, just trying to see what are the key elements that we are taking into account when forecasting, and basically also as a summary of what we have seen. Brent oil prices approaching this $7 barrier. These are the expected level for the following weeks, and then entering in January, we will see what's the effect of the cuts in production, the announced cuts in the production side. Gas futures and gas prices going down despite we are increasing demand, we are withdrawing gas from the reserve, we are in the heating season, but as there is basically low uncertainty on the winter, prices go down, gas futures go down. CO2 prices keep going down, and now with an accelerated rate, reaching the level of the 65 euros per ton, that it's the level of the previous minimums. So we will see what happens when prices arrive there. If maybe that's the tipping point where prices start increasing again. Electricity futures also went down following the gas futures. Now they are at the new lows since the beginning, or just at the beginning of the crisis, but still above pre-crisis levels. And in the longer term, things haven't changed. Prices will be driven by the renewable energy generation, production of green hydrogen, the energy storage, and also the hybridization of all these technologies is going to have a key role in market prices. Okay, and we have reached the second half of the sorry, of the webinar. And here, as Alejandro mentioned, we will be not describing in detail because, as I mentioned, we have a huge matrix of services. So just we want to show you that maybe you know us because we make long-term price forecasting. Maybe you know us because we make or we provide short-term forecasting for demand for your company. So we just basically want to make you aware that we are covering a lot of services, and sometimes we are only known for a really strong, a really small portion of all the services that we are providing. So I will show the full list, but I want to go in detail. Just if something that I mentioned, something that you see resonates with what you are doing or for what you need, just it's going to be a great opportunity to let you know, so you can we can put in contact. We can be in contact, knowing how we can help you. What kind of services can we provide? So we tried to group or separate all the services that we provide. They can be grouped in a lot of ways. We try to do it in the services that we provide at the short and medium term. That it's we are talking about minutes ahead, hours ahead, day ahead, until 2 years, maybe 3 years. That's what we consider the medium term. Then we move to the long term that can go up to 30 years, 3 decades ahead. So this is another kind of reports. Then we also have consultancy, so we can, if you are in the energy sector and you have any kind of analysis, any kind of modeling that needs to be done, some doubts about what are the expectations on prices, demand, hydrogen production, anything related to the energy sector, we can provide consultancy for that. And then the part as market integrator, we will see how we can help putting in contact different agents with similar needs in the energy sector. So short term and medium term, as I said, from minutes ahead up to 2 years ahead. And here we provide all kinds of forecasting services. We are talking for electricity markets, for price forecasting. We forecast day ahead markets, that is the wholesale market. Also intraday markets. There are 6 sessions of intraday markets aside from the continuous intraday market. So we also provide price forecasting, price stochasticity. So on top of let's say deterministic forecasting, we also provide stochasticity. So providing not just let's say one value for the prices, but a full distribution. So you can see what's the probability of having a price within a range, what's the probability, what's the 90% probability, what's the 10% probability of a price. So useful, for instance, for risk management. Ancillary services, so not only forecasting markets, the day-ahead markets or intraday markets, but imbalances, system deviations, band reserves, etc. We also do optimization for management of energy storage and hybridization of energy storage with renewable production. Price forecasting also for gas markets, price forecasting also for futures market. That's useful for when you are trying to close position or to open positions in the futures markets, knowing how the futures prices will evolve, what's the trend, are they in one of the lowest expected values, are they in one of the high expected values, what's going to be the trend for the following months, very useful. Obviously, forecasting of electricity demand, gas demand. We are talking, as I said, from minutes ahead, so online forecasting, or for planning up to 2 years ahead. We forecast demand at the national levels for all the European countries, also regional levels, also customer portfolio. If you are a retailer and you have a portfolio of customers with a given forecast level and forecast profile, we can forecast on that demand. Renewable energy production, very useful, very needed in these days. Again, online production from what's going to be the production the next hour, what's going to be the production the next month. And we forecast the main renewable energy sources: solar photovoltaic, solar thermoelectric, wind energy, hydro. And as I mentioned, we have consultancy for any of these aspects and any other thing related, anything that tells you something about all these services that we provide. And well, just showing here some of the graphs in case you see how useful would it be to have this information beforehand. Okay, and these short-term and mid-term services, who needs them? Well, TCOs, control centers. Here we are talking usually on for control centers online and real-time forecasting. It's useful. Producers, being it IPPs or utilities, buyers, being it retailers, large energy consumers, traders, investors. If you are managing energy storage, if you are managing or you are planning to manage green energy production, all these services are needed. Why and to do, or needed to do what? So O&M, operation and managing. If you are on the day-to-day operation of a power plant, a control center, you will need forecasting. to make your offers into the market, knowing in advance what's going to be the marginal price, very useful in how you perform, how you design your market offers. Planning and optimizing. If you are in I don't know, if you are the TCO and need to plan maintenance work in a given node, what's the best time, when is going to be the less demand, so in order to be less annoying for the consumers. If you are energy trading, also for energy trading, all information is very valuable. For risk management, as I said, for hedging your, managing your hedging positions in the futures market. Also for auditing, in order to validate that the decision you made at a given time was based on solid backgrounds, or based on solid expected values of prices, value of demand, etc. Moving to the long term, similar services, just extended at 30 years. Electricity market pricing, electricity market price forecasting, electricity market price simulation, so not just one forecast, but all the possible future scenarios, useful if you have to, for risk management, for trying to get what's going to be your capture price, if you are trying to optimize your energy storage management, again, forecasting for hybrid, renewable, and energy storage system. Long-term electricity demand and gas demand. This is for planning, if you are a retailer, for planning your future customers. If you are a TCO, for planning investments on the grid. Long-term renewable energy forecasting, very also needed for electricity market price forecasting. Again, solar, photovoltaics, wind, hydro, etc. Guarantees of energy certificate prices. This is one of the sources of one of the revenue sources for the renewable energy projects. So very interesting to see what's going to be the trend, what's going to be the level of the prices of the guarantees of origin, because it's going to be one of the revenue sources. And then among our clients, we can act as a hub, as market integrators for PPAs. If you are looking for a counterparty, being you an off-taker or a solar producers, PPAs for electricity, green hydrogen, biofuels, anything related with the energy sector. Or if you are trying to sell or buy renewable energy assets, we have a very large client database where we have all kind of clients, being producers, sellers, consumers, buyers, etc. Who needs this long-term forecasting? Well, basically the same kind of operators that we saw in the short term, but here we include sponsors of renewable energy projects, because sponsors usually looking at them at the longer term. And again, investors, retailers, consumers, energy storage, green production, anything that needs some kind of planning, some kind of vision of what's going to be the future of the energy markets. And why it is needed? Well, planning, when we are talking long-term planning, optimizing energy trading, if you are doing risk management at the long term, also auditing. And then when we are talking about renewable energy projects or potential renewable energy projects, financing, PPAs, when you need a reference price for a PPA, knowing the value of the energy that you are going to produce, that's a good reference for what's the value of your project, what's the value of the energy that you are going to offer, a good reference for starting negotiating a PPA. If you are exploring potential sites for renewable energy projects, knowing what's the resource, what's the wind resource, what's the solar resource in a particular location, important and needed, and very needed, and in the first stage of a renewable project. Now, focusing a little bit more in these long-term services, probably one of the services that we are mostly known is for long-term market price forecasting. And just to show you, this is a long-term price forecasting that we did for the Iberian electricity market back in October 2010. And this is comparing the forecast that we did at that time compared with the realized prices that we had and the OMIP forward curve until 2025. This is basically to show you one thing, that the price forecast was really good, and then how our model works, or how to interpret our long-term price forecasting. So basically, our models took as an input all the historical data. You can try to get what's the shape of this data. It looks kind of chaotic, but the models were really able to extract the impact of each individual variable, also to extract the internal time structure, and then it projected it into the future. Basically, knowing what's the price, the equilibrium price at what this market is working, and how this equilibrium price is going to be projected, how it's going to be extended into the future. And basically, you see that market prices, real market prices, basically did that. They followed the level and the trend of the expected equilibrium price, and then basically it fluctuated around. So that's what we expect. We know that market prices are going to fluctuate into the future, and we are not trying to guess what's going to be, which year we are going to have a rainy season with lower prices, or a windy season with lower prices, or an episode of high gas prices. We are not trying to guess that. We are trying to guess what's the equilibrium around which electricity prices will fluctuate, and then with our confidence band, we are trying to estimate how much they can fluctuate. So these bands give you a relative probability. So we do expect that from time to time prices go above or below this band, but most of the time they are staying inside. And then we have exceptional episodes like the COVID crisis in 2020, the gas prices crisis that we had in 2022. Basically, we can safely say that back in October 2010, these two episodes were kind of less than, I would say, 1%, 0.1% probable. So we expect this kind of episodes to go outside our confidence band. But the idea is that once these episodes happen, prices tend to go back to the expected level. And that's what we are seeing with prices right now. Prices right now are where we expected them to be back in October 2010. And if we look at the forward, at the future prices, we see that basically the trend is to keep the prices in this level. So trying to see what's going to be the trend and the level of prices, and then obviously prices can fluctuate up and down, but our model is giving you what's going to be the equilibrium price around which the prices are going to fluctuate. And just very fast, let's try to see in the different phases of the development of renewable energy projects when we need long-term forecasting services. If we are in the exploratory phase, so trying to see if a potential location is good for putting there a power plant. Here we are in the phase of analyzing the renewable resources in that location. Solar radiation, wind speed, so that's something that we can provide. When we move to the feasibility study, here we need financial modeling, here we need long-term price forecasting, and we also need the capture price. So based on that market price forecasting, what's the real capture price based on the technology that we are using, based on our profile of production? What is the expected capture price for our project? And then moving to the financing project, then here we need to estimate what's going to be the return, what's our capacity to generate revenue, repay the debt. we are going to need a PPA to get financing? What's the reference price that we are going to use for start negotiating this PPA? If you are an off-taker, the off-taker part of the PPA, obviously you also need that reference price. And the input to your project finance when getting the revenues is going to be the long-term price forecasting. Critical part when getting on the financing. And once you get the financing, you build it, and then it's time to operate it. Here we are maybe we start needing also short-term price forecasting when we are selling our energy into the day-ahead market. When we are participating in the ancillary services, we need forecasting prices for these markets and services. If we are hedging our positions in the futures market, we also need some forecasting, price forecasting on the day-ahead market and in the futures market. And if we want to do an M&A, we want to sell the project, if we need an audit, a due diligence, in order to make any kind of decision about our project in the future, we need a long-term price forecasting in order to know what's the value of the energy, what's the value of the project. Another services that I mentioned is the market price simulation. So not just a forecasting, but a simulation of, I would say, all the possible futures that we can encounter in the future. Market price simulations for energy storage. In our last, it was the last webinar in November, we talked about battery energy storage and the revenue stacking, how the different components of the revenues for an energy storage systems are going to be. And one of the main important was price arbitrage in daily markets and intraday markets. And in order to trying to see what's the potential on what's the potential revenue coming from this price arbitrage, we need hourly price forecasting. Once we have hourly price simulations, when we simulate several several possible futures, each of it associated with a given probability, then we can start exploring what's going to be the price difference between the lowest and the highest price. What's going to be the time span between these low and high prices? How many peaks are we going to have within the day? Can we operate it with one cycle per day, 2 cycles per day? All this can be assessed using hourly market price simulation. Also, if you have a hybrid project or you are planning a hybrid project, how are you going to optimize it? How are you? What is the expected revenue that you can get from each of the source? So, so we can provide hourly production simulator, being it solar PV production or wind energy. Then how we can provide optimization for how charging or discharging the battery based on hourly market price simulation and trying to maximize the revenue when selling the energy to the market, being it direct production or storage or stored energy. And just as the couple the two last slides, as I mentioned, we can provide market integrated services. So basically, we have an extensive client database, and we can act between a hub among all these clients. So if you are looking for a PPA counterparty, being you an off-taker, being you renewable energy projects, we have clients on both sides. So if you are looking for a counterparty, we can help you find it. Also, if you are trying to buy or to get a renewable energy project, or if you are the owner of an energy project, being it already constructed, being it ready to build, and you are looking for a counterparty, we can also act as this market integrator to put in contact potential buyers and potential sellers. And this is more or less all the services. I didn't went in detail in all of them. Just wanted to show you more or less what we are seeing, what we are offering, and if something resonated with you, okay, I am that that type of company that it's going to need forecasting services, or I need this is the one of the things that I need for my company. Then just ask. Now you know that we have the opportunity to offer this service. And we will go through the questions right now, but just let me take this occasion to invite you to our next webinar. It's going to be the first webinar of next year. It's going to be January 18th. And we will be inviting PricewaterhouseCoopers for the fourth time, I think, for the fourth consecutive year. Yeah, because if we are making the fourth anniversary, 4 times that PricewaterhouseCoopers has been collaborating with us in these webinars. We will be talking about financing, PPAs, well, a lot of things related to the energy markets. Also, looking in this 2024. So yeah, Alejandro, thank you.
So thank you very much, Uriol. Really great presentation, as most of the presentation are. As you mentioned, this is the 39th edition of our webinars, and you have been the speaker in all of those. Congratulations, mostly to you. So we will start now the Q&A section of this webinar, and I will answer the first question while Uriol reads your comments. So the question is, do you provide the long-term reports periodically or on demand? And the answer is both. You can purchase our long-term price forecasting reports in 2 ways. It can be a one-time only delivery. Whenever you need the forecast, we update it and send you the report updated. Or it can be an annual subscription with 2 or 4 deliveries per year. So for most of the European markets, we are already updating the long-term report at the beginning of each quarter. So Uriol, do you have any questions you want to answer?
Yes, there are some questions, very interesting, all of them, not easy to answer, but okay, I will try with some of the questions. Okay, let's see. How do you see the capture price for wind and for PV? How do you see it will develop in relation to power wholesale prices throughout Europe? What difference in developments do you expect within different European markets? Okay, I cannot speak for every European energy market because it will take so long and I don't have all of them in my head. But basically, how do we see in general? How do we see capture prices for wind and for solar PV? Solar PV is usually one of the most critical one because it's because everybody expects, because everybody knows that renewable energy prices put a downwards pressure on market prices, and everybody knows that if all the solar generation is concentrated in the central hours of the day, that it's how solar energy works, then with all the renewable energy in that hours, prices will go down to very low prices. So the expected capture prices for solar power plants is going to be very, very low. How do we see it and how our models see it? The energy transition and the electricity market, how the electricity market works, it's basically an equilibrium. So you you need a price that it's equilibrium, as in all markets, between supply and demand. So the price that demand is paying, the supply that the price that supply is getting. So basically, if you look at the long term, the equilibrium price must be a price that the demand is able or is expecting to pay, or it's suitable to pay, and also a price that makes the generation projects profitable. So once you start not having enough return for the generation projects, then you have less generation, you have less supply, so prices go up again. So does it first, let's think, does it make sense to have capture rates for solar power plants going down in the future as more and more energy is getting into the mix? Obviously, it makes no sense because it will reach some point where when projects are no longer profitable, then nobody else will start investing in renewable energy projects. We will have increasing demand and decreasing supply. Prices will go up again. So what we have seen, if you remember that forecast from 2010, in 2010 we had a lot of gas in the Iberian market. We have a lot of gas. We have coal. We have some wind, and we have basically no photovoltaics. For 14 years, we have no coal. We have less gas. We have a lot more wind, and we have 100 times, not 100 times, but a lot more photovoltaics. So basically, the mix has completely changed. And as we have seen, the equilibrium price, it's more or less around what we expected it to be. So in the long term, it makes no sense that prices going down forever or going up forever for the same reason. So we see, as I said, the energy transition is a huge transition that we are trying to make very fast. So we right now are seeing some inconsistencies. So we have put a lot of effort in the production side. So we are building a lot of renewable energy. We are incentivizing self-consumption. So we are basically increasing the production a lot. But we need the other side. We need the demand side. We need the electrification of transportation, of heating, producing green hydrogen. So basically, we need to incentivize the other side because you can have a lot of energy, but if you don't have demand to absorb it, then it makes no sense. So because we want to make it very fast, we will see some temporary inconsistencies like the ones that we are seeing now, where we are seeing very low prices sometimes in the middle of the day. But there are several key factors that are going to make PV projects in particular, but all projects feasible and profitable in the long term. Having capture rates, probably, they are going to be lower than the whole market price, the wholesale market price, because renewable energy is always putting downwards pressure. So your capture price will always probably be below the base load market price, but the capture rate is not going to be dramatically low. Why? Because as we increase demand, as we increase energy storage capacity, as we increase the production of green hydrogen, as we increase the exchange capacity between the markets, all these factors are going to help to, let's say, make more manageable or make more consumption of this all this renewable energy that we are putting right now. If we have energy storage system, we can manage the solar production, and we don't need to deliver all of it in the middle of the day. We can storage it and inject it afterwards during the night, for instance, where we have no sun but we have more demand. If we increase the green, if we need more demand for green energy production, green solar production, green hydrogen production, sorry, then we can be flexible and produce this hydrogen when the energy is more, when we have more energy available.
It seems that Oriol is having technical difficulties.
We
lost you for a second there, Oriol, when talking about green hydrogen. Yeah.
Okay, so yeah, basically, we don't see capture rates being a key. We have talked a lot about capture rates in our webinars, and we have always seen also all of our invited speakers are on the same page on this. We are not seeing capture rates having an impact or so large impact on the return of the projects for making them not feasible at the long term. More or less. Maybe I talked too much, but it was a very interesting question, and it's something key. It's something that we all, we usually mention in our webinars because it's something key, and it's something that it's something that when you receive a long-term price forecasting, you need to pay attention to that and to understand what's behind that price forecasting.
Thank you, Uriol. A really great answer. It certainly makes our view of at the long term clear. So if you have one more question, then you can select one more.
Let me see. Well, not a question. There are some questions relating on what do we take into account when making our price forecasting. Do we take into account increase in interest? Well, increased cost of construction. Basically, well, do we take into account all the information that we have available? Our methodology, I didn't explain it in detail, is a hybrid technology. It combines several statistical techniques, including artificial intelligence, machine learning algorithms, more classic statistical techniques like regression, econometrics, market simulation, time series analysis, very important. As I mentioned, knowing the internal time structure of a time series, it's very important when forecasting this time series at the short, medium, and at the long term. So basically, we have a lot of information available. We use all of them. Some of the information is not directly input into the model, but we use them as a cross-check. So after we get the information, after we get the price forecasting, then we check. Given that the cost of constructing a wind power plant are going to increase, given that the LCOE of PV is going down, is this price forecasting make those projects profitable? The expected return is enough, then this forecast makes sense. Because as I mentioned, if we get a price forecast that makes the projects unfeasible, then it's a forecasting that makes no sense, because it's not going to be reliable, basically because that is an impossible market outcome, given that these conditions make the generation non-profitable.
Thank you, Uriol. So we will answer the remaining questions directly by email, and that concludes the webinar today. As Uriol mentioned, I invite you all to register to our next webinar in January, and we will be sharing it with speakers from WBC for the 4th consecutive year. So thank you again, Uriol, for your presentation, and the audience for joining. Have a nice day.
Goodbye. Thank you.